Welcome back to Talk Tickers. We break down these earnings calls so you don't have to.
Yeah.
Today we are diving deep into Academy Sports and Outdoors Q3 report. And folks, this one's a roller coaster. They smashed Black Friday records. We're talking their biggest sales day ever, but the rest of the quarter, well, let's just say it wasn't all sunshine and rainbows.
It's fascinating how Academy is navigating this episodic spending environment. Consumers seem to be holding back until those major shopping events. Then, bam, they open their
A
wallets.
bit of a feast or famine situation.
Right.
So how did Academy fare overall in Q3? Give us the rundown.
Okay, so Academy's total sales for Q3 came in at $1.34 billion, but comparable sales were down 4.9%. Now, some of this can be attributed to a tough October, impacted by unusually warm weather. Not exactly prime time for selling winter gear.
Right.
Plus, they had to go up against last year's sales boost from the Texas Rangers making it to the World Series, which created a challenging comparison.
Oh, wow. It's like trying to beat your own high score after hitting a jackpot. Tough act to follow. But hey, a record-breaking Black Friday has to count for something.
Right? Oh, yeah.
What were some of the highlights?
I mean, Black Friday wasn't just big, it was monumental. We're talking a 12% increase in sales compared to last year's Black Friday, and the entire weekend was their highest grossing ever. Clearly, their value leader strategy is resonating with customers, especially in this economic climate.
So people are definitely still shopping.
Yeah.
But they're being more strategic about it.
Mm-hmm.
What about specific product categories? Were there any standouts or areas of weakness?
Well, footwear held up surprisingly well, particularly strong brands like Nike, Brooks, and Crocs.
Yeah.
Outdoor gear also saw some growth, likely fueled by the continued interest in camping and hunting.
Interesting. So even with the overall dip in sales, there are some pockets of strength. But I'm curious about the 4.9% decline in comparable sales. What factors contributed to that?
Well, besides the tough comparisons we already discussed, there's the elephant in the room, supply chain challenges. Remember that new distribution center they opened in Georgia?
Yeah.
It seems they had some initial hiccups, leading to increased costs and potential delays. They also had to reroute some goods to avoid potential port strikes, which further impacted their bottom line.
Supply chain issues have been a headache for so many retailers. It's like a giant game of Tetris,
Yeah.
trying to get everything where it needs to be on time and within budget. But Academy mentioned they've ironed out the kinks at the Georgia facility. Does that mean smooth sailing ahead?
Well, it's a positive sign. Especially as we head into the holiday season, having that facility running at full capacity is crucial for meeting increased demand and managing costs effectively.
Okay, good news on that front. Now let's talk about the bombshell announcement that caught everyone's attention. Academy's massive Nike expansion. What's the scoop?
This is a major strategic play. In early 2025, Academy is launching a huge GE expansion of Nike products in over 140 stores. We're talking a wider selection of footwear, apparel, and sporting goods. It's a clear signal they're aiming to become a destination for all things Nike.
This has the potential to be a real game changer. We know Nike is a powerhouse brand. But what does this expansion specifically mean for Academy? Could it attract a new type of customer? Maybe someone who usually shops at higher-end sporting goods stores.
It's certainly possible. By offering a more comprehensive Nike experience, Academy could appeal to customers who prioritize brand names and premium athletic wear. Think of it as leveling up their image and attracting a more discerning customer.
Fascinating. It seems like Academy is making some bold moves to position themselves for future growth. But speaking of the future, they can't ignore the current economic climate. What are they saying about inflation and the potential impact of recent political shifts?
Academy acknowledges the economic uncertainties. They're closely watching the situation and taking proactive steps to manage potential risks. One key strategy is diversifying their sourcing to reduce their reliance on China, which helps mitigate the impact of potential tariff increases.
That's a smart move. It's like having a backup plan in case things get rocky with international trade. But what does this mean for shoppers like you and me? Could we see higher prices at Academy if tariffs increase?
It's a possibility. Tariff increases generally lead to higher costs for retailers, which often get passed on to consumers. Academy is trying to strike a balance between managing costs and offering competitive prices, but it's a tightrope walk.
It sounds like they're playing chess, not checkers, trying to anticipate and adapt to potential challenges. But they're not just focusing on weathering the storm.
Right. No.
They're also making moves to expand their reach and attract new customers. Tell us about their plans for new store openings.
They're going full steam ahead with brick-and-mortar expansion. They're aiming for 20 to 25 new stores in 2025, with plans to enter their 20th state, Pennsylvania. This aggressive approach seems to contradict the trend of many retailers scaling back their physical presence.
It's a bold move, especially in this age of online shopping dominance. What's the rationale behind this brick-and-mortar expansion? Are they catering to a specific customer who still prefers the in-person experience?
That seems to be the case. Academy's leadership has emphasized the importance of physical stores for showcasing their product assortment, offering personalized service, and creating a sense of community. They believe that certain shoppers, particularly in their target demographics, still value that hands-on experience, especially for categories like footwear and outdoor equipment.
Makes sense. You can't try on a pair of running shoes or test the weight of a kayak online. But let's be honest, convenience is king these days. How is Academy adapting to the growing demand for online shopping and those need-it-now expectations?
Well, they're not ignoring the digital realm. They're investing in their online platform, adding features like same-day delivery through their partnership with DoorDash. They're also enhancing their website and mobile app to provide a more seamless and user-friendly experience.
So they're trying to cover all their bases. Brick and mortar for the traditional shoppers, and a robust online presence for those who prioritize convenience. But all of this expansion and investment requires capital, especially in this economic environment. What are they saying about their financial health and how they're managing costs?
Well, Academy is in a relatively strong position. They generated approximately $97 million in cash from operations in Q3. They're prioritizing financial stability, focusing on self-funding their growth initiatives, and returning capital to shareholders.
That's a reassuring sign for investors. They're not recklessly spending. They're being strategic and maintaining a healthy balance sheet. But let's not forget the looming economic headwinds. A lot has changed politically recently. Could potential tariff increases throw a wrench in their plans?
It's a valid concern. Tariff increases could lead to higher costs for retailers, potentially squeezing their margins and forcing them to raise prices. Academy is aware of this risk and has been actively diversifying its sourcing to reduce its reliance on China, which could help mitigate the impact of any policy changes.
Diversification is key, spreading those bets across different suppliers. But it's not just about external factors.
Right.
Internal decisions and strategies play a huge role in a company's success. What are some of the key things Academy is doing to set themselves apart from the competition and thrive in this evolving retail landscape?
Their emphasis on value is a major differentiator, especially in an environment where consumers are becoming more price conscious. Academy's commitment to offering competitive prices could be a major advantage. They're also leveraging their private label offerings to provide unique products at attractive prices, potentially building brand loyalty and increasing profitability.
Private label is an interesting play. It's like creating your own in-house brands that you have complete control over. You set the quality standards, the price points, and you don't have to share profits with any big-name brands. But I'm curious about the long-term impact of their Nike expansion. Could that strategy cannibalize their private label sales if customers flock to the Nike products?
It's a possibility, but it could also work in their favor. The increased foot traffic from Nike enthusiasts might lead to more exposure for their private label offerings. It's all about how they merchandise and market those products. Imagine a customer coming in for a pair of Nikes, then discovering a high-quality, competitively priced Academy brand jacket, and deciding to buy both.
It's like creating a synergy between their brand name offerings and their own private label products, cross-selling at its finest.
But speaking of brands and image, do you think the Nike partnership elevates Academy's overall perception among consumers? Could it make them appear more aspirational, especially to younger shoppers who are highly influenced by brands?
It's certainly a possibility. Nike carries a certain cachet, a coolness factor that could rub off on Academy. By showcasing a wider selection of Nike products, they're sending a message. We're serious about athletic wear. We're a destination for the latest and greatest. This could shift their image from a value-focused retailer to a more aspirational brand, potentially attracting those younger shoppers who prioritize brand names and style. It's like a brand makeover, subtly shifting their identity and appealing to a wider audience. But let's not get ahead of ourselves. There are still challenges and uncertainties ahead. What are some of the things that could derail Academy's plans, despite their best efforts?
One concern is their ability to execute these ambitious plans. Opening 20 to 25 new stores a year is a logistical feat, and if they stumble with construction delays, staffing issues, Or inventory management. It could impact their profitability and overall performance.
It's like juggling chainsaws while riding a unicycle. A lot can go wrong if you're not careful. They also face competition from other sporting goods retailers, both big box stores and specialty chains. How can Academy differentiate themselves in this crowded market and avoid getting lost in the shuffle?
They need to stay laser focused on their value proposition and their target customer. They can't try to be everything to everyone. They need to cater to their core demographic, those value-conscious shoppers who are looking for a balance of quality and affordability. They also need to continue innovating, whether it's through their private label offerings, unique in-store experiences, or strategic partnerships that resonate with their audience.
It's about finding their niche and owning it, standing out from the crowd, not trying to blend in. Now, we've talked a lot about the big picture economic trends, strategic initiatives, competitive landscape, but let's bring it back to the individual investor. What does all of this mean for someone who's considering buying Academy stock? What are the key takeaways they should be thinking about? It's decision time, folks. We've laid out the facts, analyzed the trends, and now it's time to put on our investor hats. What are some of the key things listeners should consider when evaluating Academies as a potential investment?
First and foremost, pay close attention to their upcoming earnings reports. Are they able to maintain that Black Friday momentum? Are they effectively managing costs?
Right.
Especially with those new store openings, and how are those digital investments impacting their online sales?
It's all about tracking those key metrics, sales growth, margins,
Yeah.
and the return on their investments. But let's be realistic. There are always risks involved in any investment. What are some of the potential pitfalls that could trip up Academy despite their strategic initiatives?
The biggest wild card is the overall economic climate. A deep recession could significantly impact consumer spending, especially on discretionary items like sporting goods. Even Academy's value-focused approach might not be enough to fully offset a major downturn.
A recession would be a curveball for sure.
Hmm.
But it's not like they're ignoring the potential headwinds. They're diversifying their supply chain. They're investing in their digital presence. It seems like they're trying to build a resilient business that can weather the storms.
They're certainly taking steps in the right direction. But there are other factors to consider. Competition is fierce in the retail landscape. Can they hold their own against giants like Walmart and specialized retailers like Dick's Sporting Goods?
Competition is the name of the game. It keeps everyone on their toes. But Academy has a few things going for them: that strong value proposition, their growing private label offerings, and the potential halo effect from the Nike partnership. It'll be interesting to see how they leverage these advantages to carve out their market share.
It all boils down to execution. They've got a solid plan, but can they deliver? Investors should be watching closely to see if they can meet their ambitious growth targets, manage costs effectively, and navigate the ever-changing retail landscape.
Solid advice. Keep a close eye on those earnings reports, folks, and don't forget to do your own research before making any investment decisions. Now for the fun part of our show. This is not financial advice, where we throw out a wild but plausible trade idea based on what we've learned today. Ready to get a little crazy?
Bring it on. I'm always up for a thought experiment.
What if we bet on Academy's focus on value, attracting an unexpected customer base? The higher income shoppers who are suddenly feeling the pinch of inflation. We're seeing luxury brands report slowdowns. Maybe those shoppers are trading down. Could Academy be the unexpected beneficiary?
Interesting. It's counterintuitive, but it makes sense. Even those with higher incomes are feeling the pressure of rising prices. They might be more open to exploring value-oriented retailers, especially if the quality is still there.
Exactly. Academy could become a hidden gem for these shoppers. They get quality products at a fraction of the cost they're used to paying. And Academy gets a whole new customer segment. Maybe their private label sales skyrocket as these shoppers discover they can get the same functionality without the designer price tag.
It's a bold prediction, but hey, stranger things have happened in the market.
Remember, folks, this is just a thought experiment, not financial advice.
No.
Do your own due diligence and don't make any rash decisions based on our wild speculation. But it's always fun to think outside the box and consider the unexpected possibilities.
That's what makes the market so fascinating. There's always something new to learn, new trends to analyze, new opportunities to explore.
All right, Talk Tickers listeners. That wraps up our deep dive into Academy Sports and Outdoors Q3 earnings call. We hope you enjoyed this journey through their financial performance, strategic initiatives, and potential growth prospects.
And as always, remember to stay informed, stay curious,
And stay diversified.
happy investing, everyone.